46. Resistance on the upside at 4,000, 10, 18, 27, and 38. Pivot 90, 39.90, resistance at 4,000, 10, 18, 27, 38, support below at 81, 73, 65, 54, and 46. All right, welcome some of the new folks that are here. We are trading mini S&Ps, looking for opportunities to scalp the market based on the levels we just gave out, in addition to any price action opportunities that might occur. We are scalping the market, so we're looking for areas of inflection that we believe the market will give us a chance to scalp for about 2 or 3 points, depending on volatility, and also depending on how you get in and how many contracts you trade. You could probably take a little bit more than 2 or 3 points on our trades. If you were with us yesterday, some of our levels got ticked off perfectly, where you got some nice rotations off of them, and we're able to take a little bit more than 2 or 3 points. But again, it all depends on volatility and how many contracts you trade, so on and so forth. So that's the concept here. We are looking for 4 to 5 trades a day on average. Sometimes we average more, sometimes less. It all depends on, like I said earlier, volatility. We also focus more on the morning hours to give us our opportunities to trade. We believe the morning hours give us good ebbs and flows to our methodology, and the volatility also is better for us in the morning than it is in the afternoon. So that's why we're focusing on the morning hours to give us our setups and opportunities to trade. So that's where we're at. And if anybody has any questions, please feel free to look in the chat box and ask any questions if you have any. Again, we are looking to scalp the market based on the levels we just gave out, and scalping is a little different than position trading. We're not trying to hit home runs. We're not trying to go for, get a position on and try to get 10 or 20 points out of it. We're looking for 2 or 3 points on our trades, and we try to get about 4 to 5 trades a day on average. Sometimes it's more, sometimes it's less. It depends how busy the market is on any particular day. We have no control over volatility. And if you look at the chat box window, you will see the levels there for you in the chat. Ignore the December 2nd, 2020 on the top there. Just look at the levels that are there for you this morning. Those are the levels that we're going to use as a guide, and we can tweak those, we can adjust those. It all depends on how the market moves. The big story the market is really concerned about over the last 24 hours, obviously the conversation that Powell is having with Congress. Yesterday he had a conversation in front of the Senate. Today he's having a conversation in front of the House. And the big story that's come out of it is what's going on in the bond market. The yield on the 2-year shot up to 5%, and it's keeping everything. It's creating a little bit of an issue there for what might happen in the next meeting. Almost forcing. They're getting a little bit of an issue here because the 2-year, which is what the Fed controls the short-term rates, and the 2-year obviously is a short-term rate, and the 5-year 5% click on the 10-year on the 2-year is really creating a little bit of a problem here for the Fed, because they're way behind the curve as far as raising rates are concerned. The bond market is telling it one thing, and they are trying to do it another way, and it's creating a little bit of an issue. And that's why the market is kind of ticking down here a little bit, because they're not they're not jiving. Bond market is saying one thing, and mm, the bond market is basically telling us we might have a recession, but the stock market is kind of not. So we're in this like weird situation. All right, and that's why the market is a little bit yesterday kind of sold off after every time he speaks. It seems like they sell off, and they're talking today too. So we don't know if they're going to be doing the same thing or not. But all we care about is opportunity, using the levels we just gave out. And if you look at the chat, you'll see those levels again. Those levels are there to guide us through in a day. Those are areas that we're going to be focused in on. There's also price action opportunities that occur once the market paints some bars, and we got to see where the market goes, and if we have any of those opportunities as well. Together, we put a methodology that's helped us trade to try to make money here. Trading, it's again, it's something that we've been we've been working on for a long time. We were here every day. We used to be on the floor of the exchange, but due to the fact that the exchanges after COVID kind of shut down, we are trading from home. So we'll see what happens here. So today, as far as any economic news is concerned, it's going to be released. We obviously have Powell speaking again in front of the House committee this morning. It begins at 9 o'clock, top of the hour here. He's going to give his opening remarks, which are the same opening remarks he gave yesterday, so that's not going to be an issue. But then the Q&A session that begins like 10 to 15 minutes afterwards is going to obviously affect the market. And you have to be a little bit careful. Yesterday, I touched upon the commentary that he made in regards to why the market kind of sold off. And that is where we're at. And as you can see here, over the last overnight, they've just basically not really done much. Tight little range, and trying to see where the next leg is, or next shoe is going to fall. Right? We'll see what happens. 9 o'clock, and then there is job openings and labor turnover survey, JOLTS, they call it. It's coming out at 9 o'clock. Might be a little bit of a market mover. We'll see. So that's a little bit of a number. Obviously, this morning we already had the ADP number that came out this morning. ADP is a private jobs report, kind of. Not like that doesn't include government jobs, and that uptick a little bit, and that create a little slide to the downside. But again, you can see the bond market is very, very tenuous there. The yield, though, on the 10s has dipped down below 4%. And this is where we're having a little bit of an issue here because of the fact that the 2-year is trading at 504, and the yield on the 10s are trading at 397. As we come down here, our first support level here is at 81. We got up to 96.7. We had 4,000, and then we're coming back down here to 81 is our support level on the downside. So again, we did not get triggered on any opportunity. So we can see the 2s to 10s have really expanded. They're over 100 basis points, and anything in the minus 100 basis points, and that's definitely creating a little bit of a problem there in the dynamics between bonds and equities. And so we'll see what happens. So we have support at 81. They got down here. They're trading at 87. Again, if anybody has any questions, please feel free to ask in the chat. If you have any questions, we're looking at support at 81. So again, we have the issue here with the bond market, and that is creating a little bit of a problem in equities. Let's see here. Some commentary from the yield situation, the market reaction, including a yield spike at the front end of the bond market, with the 2-year breaking the 5% for the first time since 2007, and across the board sell-off in stocks, with the S&P 500 dipping or dropping 1.5%, and intensification of the inversion between the twos and the tens to over 100 basis points. All three were associated with significant repricing of what the market expects the Fed to be doing in the meetings later this month, rather than overwhelmingly pricing in an increase of 50 basis points that previously signaled by the Fed. The market moved the odds in favor of a 50-point increase, which would reverse the downward shift in the hikes and the central banks prematurely made a month ago. So they are complaining that they should have kept it at 50 basis points last month. Something is not right at all. In all it is, the whole point of increased transparency adopted by the Fed in the last couple of decades is to allow the smooth economic and financial adjustment in policy. And something is not right. It's having a big, there's a big problem here between what bonds are doing and equities as we come back up here to our pivot. So again, very, very, very quiet. Very, very, very quiet trade. Not much going on, but a lot going on because Powell is going to be talking and the market is kind of just holding its breath until he starts. So again, we have the yields and the bonds creating a little bit of an issue. And it's going to continue to have a little bit of a problem here with the market adjusting to what should happen next. And I think it's going to put just a damper on any rally the market has. So we'll see. But again, that's the bigger picture. We look at the bigger picture sometimes just to give us an indication of what's going on, but we're also just scalping and we're looking for areas to focus in on. That's what we do here. But we have to understand, sometimes we have Powell's going to be talking and he's going to create some volatility. And so we have to be careful and mindful of that. If you are more risk averse, you don't want to be trading so much when he begins talking. Maybe you're looking at our levels only instead of looking at price action opportunities. There's different ways of managing risk when risk is on the table as a component of trading. There's always risk, but what degree of risk is what I'm talking about. Right, there's always risk. It's just a degree of risk that we're talking about as we come back down here to these interim lows. I don't know if they're going to do it right before unemployment, Don. I would be very surprised if they do it the day before unemployment. I would venture to say that they're probably going to have rollover next week. To do it before unemployment, not the smartest, not the smartest move. But I'm not sure. But I would venture to say it's probably going to be next week. But I'm not sure. We'll find out tomorrow morning, I guess. Either way, we're going to stick with. Well, yeah. I mean, we'll see what happens for Friday, but we'll see what happens tomorrow. But I can't. I mean, they do know. Well, maybe they didn't know. Maybe because this February was a short month. Maybe they thought it'd be okay, but who knows? I would think that they're going to wait one more day till next week to roll over, but we'll find out. All right. So again, we are just hovering around this 90 area, kind of going nowhere fast. We do have Powell going to be talking again. The JOLTS number is going to be released at 9 o'clock. Powell going to be starting his conversation. And then at 1 o'clock Chicago time, if you're going to be trading then, the Fed's Beige Book is coming out. Beige Book is a culmination of reports from all the Fed areas that they'll be checking in and giving their report to the Fed, and it kind of comes out in a what they call a beige book. And so it could be a little bit of a market mover, but we'll see. But it's a 1 o'clock Chicago time. I mean, you have Powell talking all day, so I don't know if that's really going to matter that much. Fed Chair Powell will be back in the hot seat on Wednesday, delivering his second day of semi-annual monetary policy testimony before the House Financial Services Committee. Markets are already jolted in the previous session following comments that suggested the central bank could put an end to its recent shift towards more gradual tightening. The dollar surged. The benchmark S&P index closed out Tuesday with a loss of 1.5%. Key 2-year notes and 10-year notes yield curves hit the deepest inversion since 1981. Minus 100 basis points. That's a lot of basis points there to make up. As we are hanging around our pivot here, waiting to see what happens. Again, we average 4 to 5 trades a day, and sometimes it's more, sometimes it's less. It all depends on volatility. We do not create volatility. All we do is trade it. So we are not in the, we can't just trade for sake of trading. We like to wait for opportunities, and we always have reasons when we're entering our trades. And again, if anybody has any questions, feel free to ask in the chat, please. Okay. The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy, said Powell yesterday. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, then we would be prepared to increase at a pace of rate hikes. So there he has it. He just kind of said that we're going to increase our, basically said that's why the market did not appreciate what he said. The speech shows just how dependent the Fed will be on incoming data ahead of its upcoming policy meeting scheduled for March 21 and 22. Over the next 2 weeks, investors will be able to size up the positions of how hard the central bank will go with a flurry of release schedules on economic calendar. Data points include the JOLTS report today, non-farm payrolls on Friday, as also retail sales, producer price index, and industrial production next week. The Fed will be entering a blackout period, and this was Powell's last chance to warn the market. A higher rate hike greater than 50 basis points is still possible if the data warrants it, he said, or he's indicated in his speech yesterday. The CME Fed Watch now shows a 70% chance of a half-point hike, up from 31% before the speech. So that is definitely back in the market, is bond market here today. And then we're talking about higher interest, and this is a little rally in the bond. Might be a little relief rally because they've been pounded there in the bond market. We're very, very much of a range-bound trade here. Unfortunately, we have to. There's not too many opportunities, at least not yet. And we have to be patient. If it's not going to be today, it might be tomorrow, right? If it's not going to be this hour, it might be next hour. Who knows? But at least for the time being, you can see it's very, very much range-bound, and we are very, very kind of quiet. We are right here at our pivot, so don't have any opinion one way or the other. Okay. So again, we talked about what's coming out. We got obviously 9 o'clock, the JOLTS report, and then Powell begins his conversation with the House. So that's going to be right there in the background almost all morning. So got to be a little bit careful. We don't like to trade Fed stuff. It's not conducive to good trade because the algos take over, and we very hard to match up with the speed of the algos. But you need to, if you're going to be trading, you have to understand the risk involved, and sometimes we have levels there that could get triggered. And if that's the case, you're going to have to maybe put your orders in place there so that if we market rotates to a level that we might get filled. And yesterday there was, if you were with us yesterday, we had a couple of those opportunities, and they clicked right up or down, and then gave us that entry point, and then consequently was able to take advantage of the opportunity. But we had to be patient and wait for them, right? So, and you also had to have your orders in place in the market. And I know sometimes it's a little riskier to do that, obviously, and then you have to do what's comfortable for you. But if you are able to layer your orders in the market around the levels that we give out, then when the market moves or has a reason to move, it could go right up to a level and give us a rotation and gives you a quick opportunity, or we could run through. Right? We don't know, but either way, we on the downside we have our stops in place so we can get exit if we're wrong, and you have to understand that as a risk that you're going to take if you're going to be trading. If you want the market to if you don't want to take that risk, then you have to just be patient and wait for the market to kind of settle down a little bit. Maybe not trade today because of the outside influences of what Powell could talk about or say that could create extra volatility in the market, and then wait for tomorrow, which is also a way to manage your risk. So there's different ways of managing risk. Trade smaller, not trade at all, wait for tomorrow, adjust your entry points a little bit. It all depends on what risk tolerances you have, and then how you manage those. That risk is totally an individualized thing. It's definitely not the way I do it. Definitely not the way another trader does it. Everybody here has to know their risk limitations and then manage it accordingly. And we work with you if you are interested to expand your horizons a little bit. Now we work with you to maximize your profit potential based on your risk tolerance. The bond market is giving a little bit of a relief rally here. Obviously, the yields, 2 years at 5%, again, probably indicating that the Fed has to almost raise 50 basis points when they tried to slow it down last month, but it doesn't seem like slowing down is. And it created a little rally in the market, right? That we were up in that 4,000 to 4, or right hovering on the lower end of that range. But they were the whole month of February. We were between 4,000 and 4,200, and then finally here, as more Fed decisions and numbers are released and how they're planning on doing things, it seems like they're going to probably, be a little bit more aggressive, and it's creating a little bit of a not so happy feeling in the equities. The JOLTS number is going to be coming out here in about 5 minutes, so we'll see if that creates any volatility for us. We are very, very range bound and very, very quiet, but that could change in a second. All right. especially with Powell. I mean, remember, we don't like to trade F days. F days are Fed days. This is definitely a Fed day. So if you're more risk averse, just gotta just be patient. And like I said, if you don't trade the F day, nothing wrong with that. There's always tomorrow. It's better than it was last time, right there. Let's see. Yeah, it's what is that, about 30 points away? Last time it was worse, right? It was a lot more than that, wasn't it? Differential between the months. Yeah, we're just kind of back up here a little bit upper side of the 90. I'll be in Fort Lauderdale. All right, we're upticking here a little bit. We got resistance around the 4,000 level if we get up there. We do have the jolts number coming out here at the top of the hour, so in about 2 minutes. See that affects the market at all. And we also have Powell obviously talking. But he's going to give his opening remarks, which are the same ones he gave yesterday. So that's not going to be the reason the market moves. It's going to be the Q&A session that he has with lawmakers after, as we continue to push up here. Savannah, I heard, is very nice this time of the year. But I appreciate the invitation. If I was driving, maybe I would. I appreciate that. Thank you very much. All right, kind of pushing up here towards these interim highs. We're looking at the 4,000. We have this number coming out here momentarily, so be a little careful if you're trading. Going to be back in just a second here.
Philip, he'll be back in a minute. He just walked away for a second. Probably had to catch a call or something.
Okay. Sorry about that. I had to take care of something. We went down to the 74 area there. Always 74 is a good number for us. We kind of ran through the 81 because of that number. So we talked about the volatility that could occur if the results are released and or any numbers released. You have to be a little bit careful of that. But we did go down to the 74 area there and rotated back up here very nicely. So again, obviously you had to trade around the 81. If you had the 81, I'll figure if you had them in there, you had to adjust a little bit. Maybe you did, maybe you didn't, and we obviously was a little bit close to the number, so you had to be a little bit careful there, depending on how risk averse you were. They did pop it right back up really quick. I wasn't around for it. I just quickly took a little peek, and then I saw it go back down to 74. So back up here to our pivot. So quick rotation down to the 73 area there, and then quick rotation back up. All right. Yeah. So now back up here to our pivot, and again, they're going to wait for you know, Powell to start talking. So the 73 area, even though we got down to 74, obviously the 73 is not going to be a viable number anymore. 74 is always 74, and it'll work very nicely for us. So keep that in mind. And now Powell is going to be talking, and he's going to be doing his thing here and then answering questions in front of um, the House committee. And so be careful when that happens because we're going to get some volatility somehow, some way if it says something goofy, especially after yesterday's backdrop. So you never know. He could reverse himself and say no. Who knows? But just be careful, all right? And keep your stops in place no matter what, because you never know when something's going to run through. But we did have an indication that there was going to be a number coming out here at 9 o'clock that did create some volatility. We don't like to have any positions on when the numbers are released for kind of that reason, because we don't want to be on the wrong side of it. Obviously, if you are more take a little bit more risk and you have a feeling as to what these numbers are going to be, but we never know what these numbers are going to be. So we try to stay flat when numbers are released. All right. All right, so we're back here to our pivot, so kind of neutral. A little resistance around the 4,000. You can see our green band and the hourly coming in there at 98. So a little resistance up there. Again, whatever you do, keep your stop in place, right? We're not going to love any trade we put on. So, and we're on the backdrop of volatility here with Powell's talking. So obviously there's a little bit more risk involved in today's trade simply because of the dynamics around it. So you have to understand what's going on any given day and then make a decision for yourself as to what you're going to do and how you're going to trade. Philip, I just saw your note there. I'm glad you're back, and I'm glad you hit your goal. And we're kind of just hanging here at our pivot. I got something going on in the background, so I'll be right back. And that's why My mic has been off, but I'll be back in a minute here. All right, we're just kind of hanging here against our pivots still. We got up to 96.7 area there and came back off. They retested that little spike high from this morning. And now it's coming back down here a little bit. Back here at our pivot. So very, very quiet. I know it had a little bit of a jolt on the push down. That created a little bit of an opportunity there for us. But then they quickly rotated back up here and kind of hang around here at our pivot. So we shall see what happens next. And now that Powell's going to be talking, he's going to be answering questions. Very, very more. And he can get some more volatility at any moment. So be very careful.